I'm Mortgage Mark. Let's talk about 203K loans. So 203K, the K on this means it's like a home improvement loan. So it's extremely important you watch this video to really make sure you want to do it before we start going in through all the nitty gritty and the details of what it takes. So here's why I say that. FHA is an awesome program. 203K is an awesome program. It's not going to be a program for every market. So for example, let's take the COVID years when the housing market was crazy. Homes were selling like with 5 or 6 people, asking over ask price for this, and the market's just nuts. Or when it's a market where sellers want to close very quickly. So that is not the market for 203K. Why? First and foremost, 203K loans, normal air quotes, normal loans typically close, let's say 30 days. 203Ks could take as long as 45 or 60. I'd probably err to the side of saying 60. And the reason why, guys, there's more players involved with getting a 203K loan. And those players are not you, they're not me. So they don't have the same urgency that you do or I do to get you inside that home. So here's why I say all that. I have, by the way, side note, we've done a 203K loan in 30 days or less. It was also with somebody who had all their ducks in a row. They were prepared for it. We knew exactly what they needed. She was also in the industry. She knew what to expect. So I would say, generically speaking, plan for about 60 days for a close. That's why it's hard to do in a seller's market, because you got to say, hey, Mr. Seller, I like your house, but you got to wait for all these things to happen. And by the way, all these other things could also jeopardize the potential closing and whether or not it works. So here's why I say that. The biggest thing, the biggest holdup is that you guys will need to get your contractor out to the house. So first of all, you got to get the house under contract. You got to kind of use your best guess to say, man, I think looking around, I'm going to need to do X, Y, and Z. I'm going to need to update the kitchen, the bathrooms, all this stuff. And it's going to cost me $70,000. Making this number up, obviously. So whatever it is, you got to say, man, I got to work all this out, and that's ballpark. But by the way, unless you're a contractor, how do you know that, right? That's really tough to know. And that's what makes this really hard, is to kind of get that right out of the gate. But let's say you do. You say, man, I want to buy this house for, and I'll use some numbers just to throw out there, $400,000, and I think it's going to cost $70,000 to fix all this up. Cool. So then you get it under contract. Hey, Mr. Homeowner, I want to buy your home, and I'm going to close 60 days from now, and I'm going to buy it from you for basically equivalent to this $470, right? But you're going to pay $400 for the home itself, knowing that you got to put $70 into it. Cool. Seller says thumbs up. Now you get your contractor out there. You do your home inspections, and your contractor comes back, and let's say for the sake of argument, it's $70,000. That you were right. You nailed it. It's $70,000 for what they want to do. Awesome. By the way, if they say it's $120,000, maybe that blows you out of the water. Right? If they say it's only 30, hey, that's a plus. But point is, let's just use a number, say they give you 70, says here's what it's going to cost. So here's where the 203K often fails, to where people are like, oh, I don't want to do this after all. Okay, 470. We got to figure out now, you got to get your plans, your spec, and your budget from your contractor. And by the way, we need your contractor to be approved, especially for FHA 203K loans. We got to make sure they're good. So as soon as you know, I'm going to use Joe Contractor, we got to have Joe do some work. We got to do some work. We all got to make sure that Joe's good and that FHA approves Joe, the contractor. Okay, so that's step 1. We should do that right out of the gate. Step 2, Joe now needs to go get plans, specs, and budget. He needs to say, cool, you guys need to get with Joe and say, we want to do the kitchen, we want to do the cabinets, we want to do the floor, we want to do the tile, we want to do all this stuff. And he's going to say, cool, here's line itemed out. We're going to put hardwood counters on, or we're going to put hardwoods in. We're going to put granite countertops, all this stuff. And by the way, with FHA, it has to be normal and customary. You can't go put like a gold-plated toilet in. So, but for the most part, normal stuff, right? They're just saying, don't go wild, don't go crazy. So now that you've done all this stuff, cool, you get your plan, specs, and budget. You get it to the lender. Lender's going to say, awesome, we now order the appraisal. So that part where you and the contractor figure all this out, that's what determines how fast closing can be. Because I've seen contractors that turn around in a matter of a week or two. I've seen where they're like, no, it'll take me 2 or 3 months to get it. Depends on how busy they are. So that's the hard part of knowing how fast to close, because you just told a seller you'll close in 60 days. So you got to have that stuff done within like the first week or two. After that, the appraiser is then going to take this. So we send it to the appraiser. The appraiser is going to take the plan, specs, and budget, and they're going to look around and say, man, looking at all the homes in the neighborhood, if you do these things to it, it's going to be worth X. So if they say it's 470 or higher, cool. The problem is, a lot of times, especially in today's market where everything's shot up in price, both the materials and the labor, everything's way more expensive. Of that 70,000, maybe 40 of it, maybe 40 of it, maybe 30 of it is going to be the actual materials going in the house. The other part is going to be the labor and the profit for the contractor. So if the house doesn't appraise for 470 or more, you're already starting with a deficit. So the good news is you can go above. There's some wiggle room with FHA. They let you into, again, I'll give you examples down below. But the reality is they give you some wiggle room, but it's got to be there. If they say, hey, it's going to be worth 430, you got a problem, right? They say, hey, doing all this stuff, it's only worth 430, 440. You got to make sure that whatever you're improving is adding the highest quality of value. Like landscaping, I hate to tell you, it doesn't do a whole lot. Fresh new coat of paint, it looks nice, but it probably doesn't add a lot of value, right? It's doing the things like the kitchen and the bathrooms that are going to add you a lot of value. So that's where a lot of times it gets real tough, because these things comes in at say 450 and you're like, oh, it's too, you got to go back and renegotiate. Now you got to go back to the contractor and say, okay, let's cut out this, this, and this. Well, then once you do that, you got to go back to the appraiser, and the appraiser then says, well, you just cut that out. So instead of 450, now it's 420. And it's a real problem in that sense. So you got to make sure you're spending the right money in the right places to get it done. And here's the last piece why a lot of folks are like, now I'm good. Your rate, interest rates, and it varies based on when you watch this and depends on the market, but I would say in general, plan between half a point and a full point higher in interest rate for these programs. So with 203Ks, oftentimes we see people do the 203K, they get in the home, they do all the improvements, they get done, and then 6 months later, after all the work's done, we're all talking to each other to see if there's an opportunity to refi sometime down the road. I'm not saying you have to. I'm just saying if the market, let's just say the market stays flat, nothing happens. 6 months later, if you paid a half point to a full point higher in interest rate and the market's flat, it means you can refinance it half point to full point better. If the market gets a little better, you can save even more money. Look, if the market got worse, so what? You're already there and there's no harm, no foul. But that's the thing. The cost, I'm making this up because this changes often, depends on the contract, how many draws. But I would say just ballpark about an extra $2,500-ish, right? So we'll give you some examples down below. And it depends on the state and all this other stuff, but just plan on about $2 to $3 grand more of cost for these things at closing compared to a quote normal loan. So they are more expensive in rate, they're more expensive in cost. They do take longer to do. In a slower market where houses sit longer, this is an awesome program because the sellers are able and willing to wait. Now, if you own the home and you want to refinance into this, easy, right? Because there's no longer sellers, no longer like a timeline. It's just when we get to it. So just keep that in mind. But 203K is very tough. If watching this, you're like, man, I still want to do it, let us know. We'll be happy to run through all those things with you. But just know this, again, it's more expensive because the rate's higher and the costs are higher, but you get to make it your home. That's the big benefit, right? It's like you get to pick your kitchen countertops, you get to pick all that stuff out. And it's worth it. You got to get your contractor approved out of the gate. So make sure as soon as you know what you're doing, get that approved. And then you got to make sure you spend the right money in the right places. You can't go crazy and get everything you want. It's got to be, where is that money best spent coming out of the gate? And that is the nutshell of 203Ks. So if you guys have questions, as always, reach out to us. You can find us at mortgagemark.com. Our contact information's on there if you're not already on that website. And just remember, guys, when you think mortgage, think Mark.